Welcome back to the channel. Today we will have a look at one of my most recent purchases, the JP Morgan Global Equity Premium Income ETF. As a European investor, I'm unable to purchase the SCHD ETF, so the big question is, can this new ETF beat the SCHD? So let's first have a look what this ETF is all about. This is a high-yielding ETF which in the last month provided a yield of almost 10%. On average, however, this is slightly lower. This ETF can be found on various stock market exchanges. It is known on the London stock market, on the Swiss, on the German, and also on the Italian stock market. The version of the ETF that I've purchased is from the German stock market. The stock is trading in euros, but is directly linked to the US dollar. The fund size is almost $1 billion. Let's switch to the GetQuint platform to get more details about the stock performance and the dividend history. The stock is currently trading around 24 euros and has an expense ratio of 0.35%. The performance since the end of 2023 has been steadily increasing until the recent market correction. The recent drop of this stock is caused by both the market correction but also the weakening of the dollar. If we set the currency to dollars, we can see the difference between the euro and the dollar. Currently it's trading around $27, and you can see that now the recent dip is much less severe. GetQuint also provides a nice overview of the dividends and also the breakdown of the industries and the sectors. We can see a very strong distribution over many different industries and sectors. However, the strongest sector in this ETF is still the information technology sector. This is because this ETF is still heavily relying on the US stock market. We can see that 63% of the stock is coming from the US. The biggest position in this ETF are the Deutsche Telekom, T-Mobile, Pepsi Company, United Health, Motorola and others. The nice thing about GetQuint is that we can have a closer look at the history of the dividend payouts and also the forecast. However, before we get into this, if you like this kind of videos, make sure to hit the like button and subscribe for the channel not to miss out on any future videos. This ETF is paying out on a monthly basis, and we can see that in 2024 the dividend yield was a bit less than 6%. We can see also the estimates for this year, which is currently estimated at 6.32%. However, due to the large volatility in the market, we can actually expect higher dividend yields than currently estimated. This can also be seen from the last month. The ex-dividend date was at the 8th of May and will be paid out in the beginning of June of almost 0.8% for just that month. This ETF uses options to gain additional income in a volatile market. That's why we see that in recent market the ETF is performing well. However, we can also expect that the ETF will not be able to follow upward trends as quickly as growth ETFs. In the last 12 months, we can see that the dividend yield was 6.7%. So let's have a look how this ETF performs versus the SCHD ETF. I will use Portfolio Labs for the comparison between these two ETFs. The nice thing about the Portfolio Lab is that we can actually include the dividend payments into the graphs. So the performance between these two ETFs is including dividend payments. It appears that the drawdown of the SCHD is much stronger than the JP Morgan ETF. So let's have a look in the little bit longer time frame. I've selected the 5-year chart, but because this ETF is only started in the end of 23, we are not able to see a full 5-year chart. It appears that SCHD has been growing stronger than this JP Morgan ETF. However, since the drop and the recent correction, the JP Morgan ETF remained stronger and the drawdown was much less. Let's have a look at my recent transaction. I bought about 80 shares of this JP Morgan ETF at around 24 euros, which is approximately $27. The total value of my purchase is 1900 euros and $2200. They are paying 1.7 euro per share of dividend, which results in a yield of almost 7%. This has been counted for the last trading 12 months. With this purchase, I'm now receiving almost 136 euros per year, which results in 11 euros per month. In dollars, it's about $150 and around $13 per month. Let's have a look how this position would grow over the next year if I would only reinvest the dividends. With a starting value of around 2000 euros or dollars, I will receive 7% in the first year. If I assume that this 7% remains for the next 20 years, we can see that this initial value grows to about 7,500 euros or $8,500 at the current conversion rate. If we would adjust for inflation, we would end up with a yield of about 4%. This will still double our money to 220% by the end of the 20 years without us doing anything. That's it for today's video. Do you think that this ETF is a replacement for SAHD for us Europeans? Let me know in the comment below if you also own this stock or if you are planning to buy it. If you like this kind of videos, make sure to hit the like button and subscribe for the channel. I hope to see you in the next one.